Hi there, you're watching Buy Now Sell Now on ET Now with me Shreyansi Singh and Ankita Saxena, and this is the show where we get all of your stock related queries answered from both a technical as well as a fundamental perspective. But well, first things first, let's take a look at the market.
Absolutely, Shreyansi. In fact, another day where the markets are feeling jittery and nervous about the escalating tensions between India and Pakistan. At one point, we did manage to cross the 24,380 levels, but we had a sharp fall from there on. We were down almost 78 points, but at this point, we are managing to recover. On the Nifty, we have recovered 34 points from the day's low, so we are trying to recover those levels, but nonetheless, we are trading at 24,348 is where we are perched at right now, but Nifty has turned flat right now, but we are managing to recover from the day's lows, at least for now. Nifty Bank also ditto, it is trying to reverse, it is trying to recover from the day's lows. In fact, we are up 94 points from the day's lowest point right now, but from the day's high, we have actually fallen almost 270 points on the Nifty Bank. So it is not looking very good as far as that is concerned, but the broader market, Nifty mid cap is holding on to gains. That is holding on to gains of 0.1%. So a bit of an outperformance coming in from the mid cap space. The small cap is down 0.4% right now. So overall, the mid cap space is the one that is really holding on to a shade of green as of now. We also see India VIX that's ticked up 1.8%, almost 2% gain coming on India VIX as well. But let's look at the advanced decline ratio also. That is also today tilted in the favor of declines there. So it's looking like more of declines coming in for today on the sectorally also. If you see, we have PSU banks that were outperforming till now actually are reeling under selling pressure today as a top sectoral loser. That is trading with cuts of more than 1.5% right now. So Nifty Bank is reeling under pressure. We also had the results come out from, as far as the financials are concerned. We had that news coming out on Inden Bank of Sumant Katpalia resigning, who's the MD and CEO, and with that, Inden Bank has been in news, and that has been reeling under pressure with the cuts of 2.4%. We also have a couple of earning names that had come out. We had Bajaj Finance that was trading with cuts of, that was down almost 3%. After its results, and also the downgrade that came in from Citi. So Bajaj Finance, Bajaj Finserv also came out with its results. The financial pack is reeling under pressure right now. But largely, that's how the market is shaping up. We are reeling under pressure right now, Shreyansi.
Well, absolutely reeling under pressure, nothing to write home about though. So let's see how the rest of the day in fact pans out for us. But with that in mind, let's kickstart the show, start taking all of your stock related queries. Before we do that, the number that you can write to us at is flashing on your screens as well as the top of your screens, and it is 8657974571. Do write to us with your time horizon in mind for the stocks that you hope to be investing in. For the ones that you're invested in, mention the buy price and the quantity that you've invested also. But with that in mind, let's kickstart the show, connect with our guests as well. We do have G. Chokalingam, who's the founder and head of research at Economics, joining us. Along with him, we do also have Aditya Arora, who's the founder and multi-asset research analyst at Adlytic.in as well. Good morning and thank you so much for joining us. The first query that we in fact have is coming in from our investor named Gaurav, who's writing to us about CDSL, Aditya, as well as Indigo. What do you think about both of these stocks with a fresh buy recommendation in mind?
Very good morning to you and to everyone. Look, I think markets are a little volatile right now. And if we consider the chart patterns of Indigo, then I think on back of very good correction in crude oil, this stock did very well. But now as the trend is reversing quite a bit, this stock is also losing momentum from the highs. Indigo has corrected from 5,600 odd levels to 5,300. So I would say avoid fresh buy orders right now. Better price to get into Indigo would be 5,000 and 4,800, which is the demand zone. So currently, I think it's an avoid on Indigo. And if we talk about CDSL, then recently the stock has done pretty well. But I think again over here, better buys could be, a better buy level could be seen. Currently, the stock is trading at 1326. Strong support for this counter is placed at 1250 to 1270. That's a better demand zone for this counter.
All right, moving on from CDSL, I'll come to you, Mr. Chokalingam. This is Seema, who's writing from Dubai, and she wants to invest in some stocks, and she wants to know what is in store for IndusInd Bank? Is it a good buy now, for the long run? I mean, we had IndusInd Bank in news for a while now. In fact, today we also had the MD and CEO resign from IndusInd Bank. That stock has been reeling under pressure. Would that be a good buy? I mean, what is your opinion on this?
I would not rush to buy. Of
Yeah.
course, it will be a great bank. As all of us know, the governance issues which have come up, we need to wait for the complete, the findings and ultimately how the market values in terms of price to book value. And second reason is that you have many quality banks which are not, having any such issue, and also trades at around, 1.3, 1.4 times price to adjusted book value. So when such banking stocks are available, why to rush to bank which has got into certain difficulties now? So therefore, I would recommend stocks like Bank of Maharashtra, Canara Bank, for that matter, even HDFC Bank to IndusInd Bank.
That's a recommendation there that IndusInd Bank, you can in fact look away, look at some of the other counters from within the banking pack then. But moving on, the next one that we have, Aditya, is coming in from a long-term investor, Satya Veni, writing to us from Hyderabad, wants to know about a couple of counters. So IRFC 900 shares at a buy price of 181 rupees and TCS 90 shares at a buy price of about 4,100 rupees. What do you have in mind when it comes to both of these counters?
Sure. I think IT sector is rebounding very handsomely, and the way we have seen sentiments turn in USA and see how Nasdaq has done so well in last 1 to 2 weeks. I think same kind of mean reversion trade is playing out even in India. Uh, TCS has been consistently adding strength from 3,000 odd levels and currently trading at 3476. I think there's more room on the upside. So this stock remains buy on dip. One can also buy right now with stop loss of 3,200. And the levels to watch out on the upside would be 3,650 to 3,900. So I think it's a buy on dips candidate and one must wait over here. And second, IRFC, this stock lacks little strength, although railway sector hasn't done well post the steep correction. And I think as a lot of dumping was seen at the higher levels with high volumes, so I feel institutions aren't so much interested in this counter. So wait for a solid breakout above levels of 137 to have strong conviction on this counter. Otherwise, this remains neutral to sell on rise candidate.
All right, moving on from IRFC to the next counter, Mr. Chokalingam, I'll come to you for this one. This is the Bharatwaj, who's writing from Coimbatore. He says that he has a Tata Power 600 shares at an average price of 279 rupees. He wants to know if he can buy more at current market price, and also he's looking to hold it for the next 2 to 5 years. Now, we all know that the power theme is really picking up. It's a domestically facing theme, and that's a lot of analysts are finding comfort with the power theme. But within that, is Tata Power a good name to park your money?
Oh, certainly, Tata Power is a great company within the power theme. There is no doubt about it. Of course, in 3 to 5 years, definitely the stock would improve and give return. But in the short to medium term, the price is already reflecting, fairly its valuation. Whenever the theme emerges in the stock market, a lot of people jump onto the theme in the business and as well as in the stock market. So the competition is going to be very intensified because you have a topmost industrial houses also jumped into the new energy. So therefore, I don't think Tata Power can beat Sensex or Nifty by big margin in the next 6 months to 18 months.
Tata Power is concerned, Aditya. The next one that we have is coming in from Neha, writing to us from Bengaluru. Wants to know about a couple of counters. So she's sitting at 17% profits when it comes to SBI card, 10% when it comes to AU Small Finance Bank as well. She wants to know if you have any targets in mind for the next 1 to 3 months in mind then?
Sure. First of all, congratulations to our viewer. She's making good money out there. But I think long way to go on the upside. So the party has just begun in SBI cards. This stock has been a big time underperformer since the listing, and a lot of people are waiting for upside. But recently, the structure has changed dramatically, and the stock is making higher high, higher low pattern, which is technically very positive sign. So over here, one can keep targets of 950 to 1,000. So with stop loss of 800. I think as the stock is trading above the moving average, so there's good upside left over there. And the second stock was SBI Cards and
Second one is AU Small Finance Bank, 10% profits when it comes to this one as well.
AU Bank has also done pretty well in this leg of rally. In fact, it has been the best performer in last 4 weeks. I think still upside is left. So the target for AU Small Finances, as per the pivot level, 750 to 800.
Right, moving on to the next counter from a banking name. Now, Mr. Chokalingam, I'll come to you. This one's by B. Soumya, who's writing from Chennai. She's bought IDFC First Bank at 77 for a short-term holding period. Should she hold or exit or average in at current levels? IDFC and for a shorter period, I believe.
Yeah, one can hold it, for a couple of reasons. One, the stock has been already down very badly, and therefore the price to adjusted book value has shrunk a lot. And second, recently two reputed global investors have proposed to take a stake in this bank, which is again positive. And third, the entire banking sector has got a lot of tailwinds for the current year. Banking sector will be one of the few sectors to continue to post the core business parameter in double digit. So considering these facts, I think one can hold IDFC First Bank even in the short to medium term.
Coming in as far as IDFC First Bank is concerned, Aditya, the next one that we have is coming in from Priyesh, who's writing to us from the National Capital, wants to know about 200 shares of Canara Bank. Buy price is 90 rupees. So what do you make of this particular counter? He's asking if he should be adding more also at these levels.
Sure, I think PSU banking space has done very well recently and has stood as winner or outperformer in the recent times. I think that shall continue as the volume participation is pretty good in Can Bank and it has broken above its important downward trend line of 95 odd levels. So it's a buy on dips candidate one can accumulate and stock may be expected to hit higher levels like 110 to 115. One can establish stop loss of 85, which is the important medium term support for the counter. So over here, the view remains buy on dips and one can accumulate.
All right, moving on from one banking name to another one, Indian Overseas Bank, IOB. This query is from Balaji from Tamil Nadu. Mr. Chokalingam, what will happen to IOB stock now that it's going to raise capital? He has 6,000 shares of IOB at a buying price of 43 rupees. Shall he hold it for the long term?
I'm extremely sorry, I have not updated myself on the fundamental parameters, so not able to give view on IOB.
All right, then I'll come to you, and move on to you, Aditya. IOB, what would be your view on IOB?
I think in IOB, the stock has seen significant correction from 83 odd levels seen in Feb 2024 to 34. The stock has corrected by more than 50%. Definitely something is wrong in this counter. Hence, the stock has corrected 50 to 60%. But from here, the most of the bad news or bad fundamentals are priced in. One can keep stop loss of 32 and keep a view of neutral to bullish stance. Over here, there could be a possibility of mean reversion trade playing out, and we can see bounce back till levels like 40 to 45. So over here, the view is buy on dips and bullish.
All right, then buy on dips is the take coming in when that particular counter is concerned, and the bad news seems to be baked into the buy. That's also the take coming in. But moving on, then, Mr. Chokalingam, I'll come to you with the next one because 100 shares of REC International at a buy price of 750 rupees is what Radha Krishna from Bengaluru is holding on to. Wants to know your take when it comes to this particular counter.
Value looks quite reasonable. So I would give a hold recommendation on RS.
REC. Right, so that's the recommendation as far as REC then is concerned. The next one that we actually have is coming in from K. Narayana Reddy, writing to us from Warangal, wants to know about 75 shares of BSE, Aditya. What do you make of this one? What should he be doing when it comes to this counter?
We have maintained little bearish stance on BSE recently, and so I think the stock has hit an important trend line resistance of 6,700 and 7,000. So 7,000, a lot of call writers are also active. I think this can act as important resistance for the counter. So good time to take chips off the table. There could be some correction going ahead, and we have also recommended bearish stance on this counter.
All right, Aditya, stay with us. This is Satya who's writing in. Wants to know your view on either Crompton or Havells that can be entered now from a long-term perspective. Which one would you prefer, Crompton Greaves or Havells?
Right. If you see charts of both the counters, I think Havells has done pretty well recently, and the stock is making high high low pattern accompanied by good strong volumes. Stock is also trading above its important moving average. So I think Havells also having a good brand value, and technically also the stock is doing well. So my pick would be Havells over here. One can be bullish on Havells at 1611. Stop loss should be 1411 and target should be 1811.
All right, then Havells, that's the recommendation coming in when it comes to that particular counter. But it's time for a very quick breather on the show. When we come back, we'll continue taking all of your stock-related queries, so don't go anywhere.
Welcome back. You're tuned to Buy Now Sell Now, where we take all your questions and get them answered by our expert. You can keep sending in your queries on the number that's flashing on top of the screen. You can send the buying price of the stock and the holding period, and we will get your questions answered. Let's resume. Then we have Aditya Arora and Mr. Chokalingam who are answering all our questions. Coming to you, Mr. Chokalingam, this is Sindhu who's writing from Abu Dhabi. Now, Sindhu says that she holds 40,000 shares of Power Grid at an average price of 350 rupees. She wants to know if she should be holding on to it, and what's your view?
Yeah, this stock also has corrected more than 15%, and there is a lot of valuation comfort. So the investors can hold Power Grid Corporation for medium to long term. That is minimum with 1 month, 1 year investment horizon.
Then that's the take coming in as far as that particular counter is concerned. The next one that we also have, Aditya, is coming in from Somashekhar, writing to us from Bengaluru. Wants to know about SBI at the current levels. What do you have in mind when it comes to fresh buy?
Recently, PSU banks have done well, and same is true for SBI. We saw a dash from 680 odd levels to 800. That shows that corrections in this counter could be over, and the stock is trading above its median levels of 770. So that suggests technical positiveness over here. So I maintain bullish stance over here, and one can accumulate this counter at 790. One can keep stop loss at 720, and target should be 850 to 900.
All right, moving on then. Coming to you, Mr. Chokalingam, this is Nikhil Sharma, who's writing from Mumbai. He's an intraday trader, and I guess, Aditya, you'll have to take this one. Intraday trader and a short-term trader. He has 100 shares of ITC Hotels at a price of 205, with a target predicted as 219. When would be the right time to exit the stock, or is it better to hold on to it? He's already told us the levels also. Aditya, what would you say?
As he has very short-term view, currently the stock is going under pressure. So if the stock breaks 192 odd levels, I think the short-term bearishness could increase. And if he has to enter quickly and exit quickly, then he should wait for the breakout. Breakout will happen about 207 odd levels. So about 207, he can reassess and rebuy. Currently, there's weakness in the counter for the short term.
All right, then the next one that we actually have, Aditya, I'll take it across to you because you've slightly hinted towards this. When you take a look at the tech-heavy Nasdaq, of course, you do have that particular index being the only one amongst the three key indices for Wall Street that is holding on to some gains, at least on a monthly basis. So what do you make with that in mind of Emphasis, Coforge, both of these counters with regard to fresh investment ideas, and add Shriram Finance also to that list?
Sure, I think Emphasis is very good candidate in the IT pack, and we have seen stellar rally in the counter from 2000 odd levels to 2500, almost a 20% jump recently, and the stock is currently forming in inverse head and shoulder pattern. So that is technically considered very positive in technical analysis, and I think the breakout can happen above 2560 odd levels. So currently the structure is positive. I maintain very positive stance on Emphasis, and same is true for other mid cap IT counters, as the overall texture of the sector is turning positive from bearish. And after a long time, a long period of price consolidation, price correction, this sector is turning up aggressively. So I maintain positive stance on mid-cap IT space and emphasis as well.
All right, moving on then. The next counter is this one's coming from Rohan from Pune. He's purchased 200 shares of Vedanta at 489 for the long term. Is it a hold or a sell, Mr. Chokalingam, on Vedanta?
I would maintain a sell call on Vedanta, and Hindustan Zinc in our research view is far better than Vedanta. It has come out with very good results, and outlook for silver also quite decent. So therefore, in our research view, Hindustan Zinc is far superior to Vedanta.
Alright, and that's the take coming in as far as Vedanta is concerned, and the outlook for even silver is very good. Of course, today is Akshaya Tritiya, and we do have a special show that you should be keeping an eye on at 1 p.m. But with that in mind, let's move on to the next query that we have. Aditya, we're getting a whole host of queries when it comes to the IT pack. So tell us about Persistent, 90 shares at a buy price of about 5,800 rupees, and even PFC, 880 shares at a buy price of 518 rupees.
Sure. Again, one more IT stock, as you rightly said, a lot of queries in IT back because it has corrected for such a long time and people are stuck at higher levels. Now, as people are seeing recovery, they are thinking to exit the counter. But as we analyze the charts of Persistent, it has rebounded very strongly from 4,100 odd levels to 5,400. So a jump of more than 25% over here. That's very strong. Until unless there isn't strong institutional buying, this cannot happen. So over here, the outlook is positive. One can keep stop loss at 4,500 and target over here is 6,300. So outlook is positive on Persistent. And the second one was PFC or Power Grid.
Yes, that's right.
So in PFC, the structure isn't so positive. So I would say that one can consider opportunities to sell on rise. And if we consider a chart of Power Grid, same kind of structure we have seen recently, but Power Grid is better compared to PFC. But I would say that 325 to 340 a good resistance level for this counter. So one can wait for higher levels. Good time to take chips off the table at higher levels of 330 to 340.
All right, Mr. Chokalingam, let me come to you also on the IT pack, since there are a lot of queries for the IT pack. Because IT pack has corrected fair bit, there's some bit of a valuation comfort there. But tell us on the fundamentals, how do you see this entire IT pack, specifically since we're talking about persistent system, how do you view the IT pack after this correction?
Yeah, very interesting question, very relevant to the current juncture. The wealth creation, possible wealth creation from the large IT stock is over quite a long ago. At best, there could be defensive. And even now, I don't think the large IT stocks are going to create any alpha or any significant return. It's most unlikely that they will beat Sensex and Nifty. Because IT service exports in dollar term was growing at 4 to 6%. Now it has become 1 to 3%. For some companies, it is even stagnating or declining. And that situation is not likely to change in the next 6 months to 18 months in my firm view. At the same time, if you observe, similar thing we saw in 2014 to 2018, the industry went through difficult time in growth, in terms of growth. So that time, the consolidation started in the small and mid-sized IT companies. Starting from Polaris, we saw so many IT companies being taken over, including Mindtree, many other companies. So my strong view is that now the time has come once again for further consolidation in the IT stock, because large IT stock, one hand, they can't grow. On the other hand, they are sitting on a lot of cash. And the valuation also, even for small and mid-sized IT companies, have contracted. So as an analyst, my firm forecast is that in the next 1 to 3 years, you will see a lot of consolidation. So from that perspective, this morning we done a very thorough analysis of comparative valuation of all small and mid-sized IT companies. Among all of them, according to me, the sign looks very, very impressive. In terms of EV to EBITDA, in terms of P ratio, it is the cheapest to stock. Not only that, it's while focusing on engineering software on standalone, it has got a subsidiary in DLM, Sign DLM, which is into engineering product manufacturing. And then it also third vertical recently, that is semiconductor through 100% subsidiary. So that gives me a lot of comfort that it is not a pure IT service play. It is quite well diversified within the electronics sector. So I strongly favor Cyient Limited, which is a software company.
Thank Aditya.
Take coming in as far as Cyient then is concerned. Thank you so much, Aditya, for taking time out and answering all of those stock-related queries. We, of course, also have Forum Cheraus joining us on the show to answer all of your stock-related queries as well. The next one that we actually have is coming in on a few of those banking counters. Forum, I'll take it across to you because you've just joined us. A very good morning to you. The first query for you that we have is coming in. It's quite a little bit of a googly at this point because you do have an investor, Balan, who's mentioned a few of these counters coming in from the banking pack: AU Small Finance Bank, Federal Bank, Bank of Maharashtra, IDFC, First Bank, as well as Indian Bank. Take your pick. He wants 2 counters that he should be investing in.
Is Ujjivan Small Finance Bank mentioned?
It's not.
Okay. Sorry, before that, good morning and thank you for having me on the show. Well, to start off with something like AU Small Finance, that in fact is overall a good stock. We've seen an excellent momentum in the stock as well. Right now, we are seeing a bit of a retracement, and we've actually seen the banking stocks outperforming also. So it's kind of a retracement, and there could be news that can add in for these retracements or corrections. But overall, the stock is good, and one can look for levels of closer to almost 655 to around 660 levels to consider getting into the stock. If you have, it's clearly a hold, good volumes, etc. Even from a long-term perspective, potential upside target is closer to previous highs of closer to around 745 to almost closer to 750. So AU Small Finance is good, and the next one I like is IDFC First Bank. Overall, we've seen a good upside momentum in the stock in the past 1 month, but now it is at a very crucial juncture, that is at a 200-day moving average. So when we talk about a 200-day moving average, it is more like like an underlying trend. It's changing now. It's trying to move from sidewards to upwards. So overall, the stock is good. So these current levels of around 62 to around 63 are good to buy and hold on to. And once we take off these levels on a weekly closing basis above 67, we can expect some potential up move even from a long-term perspective and a momentum perspective towards around 74 to 76.
All right, thank you for that view, Forum. But coming to you, Mr. Chokalingam, this is Krishna is writing from Chennai. He says he wants to know if he can buy Tata Motors now for the long-term investment or even a short-term perspective. So he basically wants your fundamental view on Tata Motors.
Yeah, I have been maintaining a negative view on Tata Motors. I continue to maintain. All of us know the kind of problems the export of cars from Europe to America has. And of course, last night US President reportedly mentioned that he might relook at the tariff on automobile sector. But definitely, there will be some rise in the tariff, which would be negative for Tata Motors. On the domestic front also, the commercial vehicle segment is, having a lot of pressure in terms of year-on-year growth. Either it is stagnating or declining every month on a year-on-year basis. And third, in SUV segment, Tata Motors has lost its momentum, and M&M has taken over the leadership in terms of year-on-year growth in SUVs. So I believe whether short term or long term, M&M is far superior to Tata Motors. It's at a consolidated basis, it is highly diversified across various business verticals. And B, within the standalone also, it is diversified across various segments like tractors to two-wheelers to SUVs. And third interesting point is that if you look at a standalone, only 4% of the overall earning is from the foreign exchange earning. So 96% of the revenues of M&M on standalone basis from the domestic markets. So that has been my theme in the recent time ever since US started the tariff war, that focus on domestic demand driven stock. And M&M fits very well. And it doesn't have any uncertainty like Tata Motors. So all these stocks, whatever I discussed, we personally don't have any exposure.
All right, and that's the take coming in as far as that particular counter is concerned. Tell you what, let's take the next query that we have for him. It's coming in from Tom Sburgis, writing to us about 100 shares of CG Power bought at a buy price of 650 rupees. What is your take coming in as far as this counter is concerned?
Well, CG Power, if we speak that this year, actually this calendar year, the stock price has been consolidating in a very wide range. So if we take at the lower range, it's closer to 530 to 540, and on the upside is close to almost 660 levels. So currently, it's clearly into consolidation. His buy price is closer to 650. It's clearly a hold, but maintaining a strict stop loss below 607 is advisable in order to maintain your risk and to protect yourself. And on the upside, if we take off these levels of 668, you can expect a little bit of a higher target towards 695, which coincides with the 200-day moving average, where on an intermediate term, it can face a bit of resistance. And you can consider reducing your position at those levels of closer to 695. So at the moment, it remains a hold. Just maintaining a stop loss is advisable.
All right, that's the view on CG Power. Coming to you, Mr. Chokalingam, this is Anjali, who's writing from Chandigarh. Now, she's a senior citizen. She has 300 shares of Adani Power at a buying price of 645 rupees. She wants your guidance on that. And also, she has 111 shares of MTAR Tech at a buying price of 2,176. She wants to know what should she do with MTAR Tech as well.
Yeah, MTAR Tech, I maintain a sell call. I have done analysis. That's our research view. And Adani Power, one can hold. Yeah, the valuation is stretched, but ultimately the big industrial houses would make a big dent on, the new power sources. Therefore, I would recommend hold on Adani Power for long term.
The take coming in as far as that particular counter is concerned. The next one that we actually have is coming in on Tata Consumer for the short-term forum. What do you think about this counter? Because Neha from Bengaluru wants to know about the 12% profits that she's making when it comes to this counter. Wants to know what she should be doing next.
Well, I think what she can do is that at the moment, just book like partial profits of closer to almost 25 to 30% and hold on to the balance with a stop loss below the levels of around 1135. The reason being, I'm asking her to hold on to the balance quantity because the stock price has seen a very steep up move and continues to remain in that upward momentum. And we have seen a very good increase in volume as well. So currently, it's not suggesting that she should be exiting it. But RSI is showing a bit of a marginal negative divergence. Hence, I'm advising to book partial profits and maintaining a trailing stop loss below the levels of 1135 should be maintained. And the next target that she can look for is closer to 1200, where she can book additional profits.
All right, so that's the take on Tata Consumers. But coming to you, Mr. Chokalingam now, this is from Swati. She wants to know from this financial pack, she wants to know 2 to 3 stocks that are better for the next 2 years. That's L&T Finance, Shriram Finance, AU Small Finance and RBL, which would be the better counters for the next 2 years, 2 to 3 stocks she wants.
I would prefer to recommend a hold for a medium to long term. Shriram Finance, fabulous achievements in the last 10-15 years. And yes, growth would come down, but they would be able to maintain steady growth for next 3 to 5 years. And RBL, I would not recommend. Instead of RBL and other 2 stocks, namely L&T Finance, I would strongly recommend Bank of Maharashtra and HDFC Bank. So these are the 3 stocks I would recommend. Yes, HDFC Bank struggled a lot in the last 6 months to 1 year, but I think in my personal view, the worst is over for HDFC Bank with the March results. So going forward, it should be able to improve credit growth significantly. And Bank of Maharashtra, I already covered. According to me, Bank of Maharashtra is the best bank among all the listed banks with the least net NPA, solid growth, and attractive valuation. So these are the 3 names I would suggest in BFSI.
All right, and attractive valuations when it comes to some of those recommendations then, but let's move on and get you an ET exclusive in the meanwhile. According to sources, Dixon Tech is set to participate in electronics components manufacturing scheme while the company will partner with China's HKC. Government's approval awaited for the same. Sumita standing by with some more details. Sumita?
Absolutely. So big news coming in from electronics manufacturing services Dixon, that sources say that will be foraying into the recently announced electronics components manufacturing scheme. Remember, the guidelines were just recently released, and sources are telling us that the company is planning to invest close to 1,600 to 1,800 crores, and it will be looking at entering into 3-4 categories. First up is the segment on display modules manufacturing, which will be undertaken for mobiles, TVs, for which the company will be partnering with China's HKC. Remember, it's a 74:26 ownership structure with HKC, and Dixon will be holding a majority share in that partnership. Now, in the first phase of production, the company is likely to include production target of 2 million units per month and a likely capex of 250 crores. That capex then will be scaled to 450 to 500 crores in the second phase of manufacturing. An expansion of capacity for mobile displays to 4 million per month of 550 to 500 to 550 crores in the next 2 years. Other than display modules, well, the company, according to what sources are suggesting us, will be entering into lithium-ion batteries and enclosures, those segments as well. And initially, the company will be meeting captive requirements before it expands to exports. Remember, the electronics components manufacturing scheme with an outlay of 22,919 crores was introduced last month. The guidelines, like I said, for which were introduced or rolled out 2-3 days back by Union IT Minister Ashwini Vaishnav. The scheme is aiming to build local value addition for manufacturing in India and eventually aims to integrate India into global GVCs.
All right, Sumita, thank you so much for getting us details on that. We'll keep you updated more on the news. But with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we continue to take your queries on the other side. Stay tuned.
Welcome back. Thank you so much for staying tuned in. You're watching Buy Now, Sell Now on ET Now. Let's continue taking all of your stock-related queries. The next one that we actually have, Mr. Chokalingam, is coming in from our investor KB Singh, who's writing to us from Chandigarh, wants to know about 450 shares of SBI Life. Buy price is 1,480 rupees. What do you make of this particular counter?
HDFC Life, I believe, is
SBI
far
Life.
superior to SBI Life.
Right.
Therefore, I would give a sell call on SBI and buy on HDFC Life.
All right, moving on then to the next counter forum. Let me come to you. This is Indramani, who's writing from Dubai. He wants to know if she should hold Bandhan Bank. What would be your take on Bandhan Bank? There is no buying price or target price written here. But Bandhan Bank, what would be your view on this?
Well, I would say it is comparatively an underperformer compared to other banks. But if we look at it as a stock price, technically is showing that there is some kind of more downside, or we would say it is kind of going to retrace. The stock price was consolidating and facing a lot of resistance near 156, 157. It broke off in the middle of this month, and then we saw an upward rally. But it's facing a lot of resistance at 172, 173 levels, which is also coinciding with a 200-day moving average. So I think she should, if she's a long-term investor, it's a hold. But if she's looking from a trading or a short-term perspective, she can consider maybe switching or booking profits and look for lower levels to re-enter in towards 157 to around 158, because that becomes a support level, which was initially a breakout level.
All right, then that's the take coming in. As far as Bandhan Bank then is concerned, Mr. Chokalingam, the next one that we have is coming in from Pranav, who's writing to us from Ambala. Wants to know about MRPL, 100 shares at a buy price of 143 rupees. What do you make of this counter?
These refinery companies is a very peculiar pattern, especially in the last 5 years. Because of the inventory adjustment on their oil purchases, the performance keeps fluctuating very widely. Abnormal profit to abnormal correction or losses. So now, considering that the tactical, possibility, and also considering the fact that the stock has almost fallen 50% from the 52-week high, I would give, buy recommendation on MRPL. There is a tactical possibility of some upside, at least 15-20% in the short to medium term in MRPL.
All right. Thank you to both Forum and Mr. Chokalingam for joining us today. We will move on from here. That's the end of your queries. But now we are joined by the management of Aether Energy, Mr. Tarun Mehta, CEO and ED. Thank you so much, sir, for joining us today. Right off the bat, that you are planning to spend over 900 crores on capital expenditure for a new plant, while your existing capacity is apparently underutilized. Can you justify the significant investment in the new capacity when the current resources are not being fully utilized? And how will this new plant specifically address the existing underutilization or contribute to your profitability?
Right. So last year we launched a new product, Aether, which is our family scooter, and that has like last year basically became a very pivotal year on the back of that. To give you some numbers for context, our plant capacity is about 35,000 units per month. October 23, we sold 10,000 units. October 24, and this is data out of the government Vahan portal, so you can check. October 24, we went from 10,000 to 21,000 units out of a capacity of 35. So, and this is literally just within a few months of starting sales of a new product. The new family scooters landed really well across the country, but particularly in the non-South markets, where historically we've actually had limited distribution in the past. We've seen our market shares go from, like in Gujarat, for example, we've gone from 5% to almost 25% market share. Maharashtra, MP, we have seen like sudden surge in volumes in all these markets, which is what's also making us bullish about adding new distribution and new stores in these geographies. As that happens and we can extend the success of these new products in more markets, we're feeling very bullish about volumes and continued increase in capacity utilization. On 21 out of 35, you can already see we are at, we've increased in utilization quite a lot. Secondly, we are getting ready to launch our lower cost scooter platform called the EL scooter platform. This is optimized for cost, and this allows us to then hence build even more aggressively priced products. As that comes live, we obviously expect our volumes to trend even better. And you put these things together, which is why we are starting to invest in new capacity. In automotive, a greenfield facility will take a fair bit of time, and which is why out of the IPO proceeds, we have planned this investment.
Hi, Mr. Mehta. This is Shreyansi as well joining in the conversation. I wanted to check with you about the company not being eligible for PLI benefits. How does that really, the lack of access, in fact, to this government incentive, how does that impact your manufacturing strategy, cost structure, competitive position as well, especially compared to competitors who may be receiving such benefits at this point in time?
You know, not having PLI, we worked with it for a few years. There are a few years left in the PLI now. We now see this as some sort of a effective incentive for our business to push and create additional sources of margin, revenue, and profitability. So, for example, over the last few years, we took the software that we were building on our product, and we were able to monetize it completely separately. This has allowed us to expand our top line and particularly expand our margins quite significantly, because this is a 53% EBITDA margin product. And this is a little bit of a unique Aether strength to the kind of margins we've been able to grow our software. We've also been able to keep our pricing in the more mass premium space. So we've been very disciplined with that. Ultimately, as a long-term buyer of, if you're looking at Aether from a long-term perspective, what I think should give you a lot of comfort is that Aether's pricing is truly independent. Aether's pricing and margins, both are truly independent of government subsidies like PLI, which makes in some sense our P&L actually quite bulletproof. So we actually feel pretty comfortable with the idea that our pricing and our business models not dependent on things like production linked incentives.
All right, thank you so much, Tarun, for joining us today. Now remember, Aether Energy's IPO closes today. It is the last day to subscribe, and this is an IPO that's worth 2,626 crores, and in fresh issue, and the offer for sale is going to be for around 354 crore rupees on the upper cap. So the last day to subscribe to Aether Energy's IPO. But with that, it's a goodbye from Shreyansi, I, and the entire team that put this show together. We'll see you tomorrow with your questions. Tomorrow, I beg your pardon, is a market holiday, but we'll see you on Friday. Stay tuned to ET Now.